Hello, everybody, and warm welcome to our pan-Baltic webinar, and we are pleased that you have joined and expressed your interest. Today's webinar is a combination of both capital markets and ESG. We have already received questions to our speakers from the participants. Thank you for this. The speakers will provide replies to these questions during presentations or after all presentations are completed in Q&A session. We also invite you to ask webinar topic-related questions during presentations via Q&A tool that you see on your screen. And we will try to reply to them after all presentations are completed in Q&A session if we will have a time. Now, shortly about agenda. First topic in our agenda will be covered by our colleague Lina from Lithuanian office. She will discuss mid-size issues from 1 to 8 million euros in respect of the bonds. This topic also will be relevant also for those issues that are not ESG related, so standard bonds. Further, we will focus more towards capital markets and ESG matters. First, Oliver from Estonian office will have presentation about EU sustainable finance legal framework, and then Agneta will proceed with new EU green bond regulation. We are honored to have our guest speaker, Silver from LHV Bank Estonia, who will close the webinar and will have the last topic and will shed a light on sustainable bond market. Please also be informed that the webinar is recorded, and afterwards the recording will be available at Sorainen YouTube channel, Sorainen website, the events section, and other Sorainen accounts in social media like LinkedIn and Facebook. Actually, we are also considering to arrange another regional capital markets and financing webinars. So if you have any topics that you would like to hear from us, we would appreciate that you share them with us. We wish you to enjoy our webinar and hope that each of the listeners will have his or her own takeaways after this webinar, either new additional knowledge about capital markets, ESG, or perhaps new ideas about new bond issues, how to improve the business. So first, I give a floor to my colleague Lina from Sorainen Capital Markets from Lithuania. She will talk about mid-size issues of bonds, so from 1 million to 8 million euros. Previously, each Baltic state had its own procedure for such issues, as such bond issues are not covered under the prospectus regulation. In our Sorainen and pan-Baltic capital markets, we have seen cases that these different procedures have even created additional administrative burdens on the issuers. So the actions taken by Baltic states' financial supervisory authorities to align these procedures are much welcome. So, Lina, please, the stage is yours.
Good morning to our viewers and listeners. Inese, thank you for providing me the floor. I'm glad to see that the topic of issuing bonds, including issuing of green bonds and sustainable bonds, raises so much interest. Many of you probably have heard of what at least the Lithuanian Ministry of Finance announces as one of the milestones in the development of the pan-Baltic capital markets. That is that after several years of working on the project, the financial supervisory authorities of the 3 Baltic countries have finally agreed and adopted uniform rules for information document. In my presentation, I will look through these rules. However, as a starting point, let's see what is the place of information document among the documents that have to be prepared for the issue of securities. Now, the basic rule in the European Union for issues of securities of bonds that are above 8 million euro, for Estonia currently that's 5 million, is that a prospectus must be prepared. Now, coming back to the thresholds, as I mentioned, in Estonia currently the threshold is 5 million, but I was informed by my colleagues from Estonia that a draft law has already been prepared where this limit will be lifted to 8 million euros. At the same time, at the European level, we hear that discussions have been started to lift the threshold to 12 million euros, taking into account also the inflation that has happened in the time since the 8 million threshold has been put. However, to date, there are no any particular documents where that would be approved already. So what is that prospectus? Prospectus is a rather lengthy and detailed document. It is drafted according to the prospectus regulation, which sets very detailed rules for different kind of prospectuses that have to be prepared for different kind of securities. Just for better understanding, think of a document starting with 70 pages, A4 format, filled with text. Now, the prospectus has not only to be prepared, it must also be approved by the supervisory authority. The approval terms are regulated by the prospectus regulation, and that is 5 business days. The term is increased to 20 business days for first-time issuers. Naturally, while reviewing the draft, supervisory authority may ask for additional information, may raise questions. So in case additional information is asked or the draft of the prospectus is amended, the term starts calculating from anew. Now, the greatest advantage of the prospectus is that it can be passported within European Union. What does it mean? That is, if the supervisory institution authority of one country approves the prospectus, the same prospectus can be used in other countries. If Lithuanian supervisory authority approves the prospectus for bonds, the same bonds with the same prospectus can be offered in, say, Poland, Czech Republic, France, you name it. And then there are certain exemptions when prospectus is not required. Among the most popular are the fact when bonds are offered to professional investors, when bonds are offered to retail investors, but not more than 150 per member state, when the nominal value of the bonds is at least 100,000 euros, or when investor is required to invest at least 100,000 euros into the bonds. And then there are several more exemptions. Now, when the issue of bonds with a public offer is between 1 and 8 million euros, the 5 euros for Estonia, then the issuer can choose not to make a prospectus, but instead to make an information document. Information document is a significantly smaller document. Normally, it has way more visuals and much less text. Unlike for the prospectus, there's no requirement that such information document would be approved by the supervisory authority. It is sufficient that the issuer prepares it and publishes it on its website. At the same time, no passporting procedure is possible, which means that every member state of the EU has a right to establish its own rules to which the information document must comply. And here you can better understand the achievement of the Baltic countries. That is, currently, the rules for information document in Lithuania are the same as the rules for the information document in Latvia and the rules for it in Estonia, which means that if you prepare an information document according to the rules in Lithuania, it automatically complies with the rules in Latvia and in Estonia. Going further, if the issue of securities of the bonds is under 1 million euro, neither prospectus nor information document is required. Now, the situation is a bit different regarding the regulated market. In case you want to list your bonds on the regulated market, a prospectus is required, both for bonds that are issued up to over 8 million and those between 1 and 8 or 5 in Estonia. For issues under 1 million, no prospectus is required. In European Union, we also have such a concept as alternative trading venue, and in the Baltic countries that refers to Nasdaq First North. That is a less regulated venue where securities may be traded, and with The less regulated also means that there is more flexibility for the documents that they may require. So from here goes the exception that when the issue is between 1 and 8 million or 5 in Estonia, then information document is sufficient for inclusion of such an issue for trading on the First North. When the issue is under 1 million and the issuer wants to include it for trading on First North, a company description in accordance with NASDAQ rules has to be prepared. But what we hear at this point from NASDAQ is that after the latest change of requirements for information documents, they are considering to change this requirement and say that information document would be prepared also for issues under 1 million euros, because the regulation is kind of straightforward and it's easier to have them uniform rather than to invent yet another form of document. And unlike for public offers, if the offer of securities or bonds is private, that is to investors that are known in advance, and it doesn't constitute the public offer, then none of these documents are required. So just to stress where we find information document, that is public offers of 1 to 8 million or 5 in Estonia, and inclusion of the same issues for trading on the NASDAQ First North. Now here you see the structure of the document, of the information document, according to those pan-Baltic rules, if you wish. There are some differences regarding the language in which the information document must be prepared. The rules in Lithuania are that it must be in Lithuanian unless the offering takes place also outside Lithuania. If the offering takes place also outside Lithuania, then the document can be prepared in English. What I hear from my colleagues in Estonia and Latvia is that if the offering is taking place also in those countries, then information document must be translated into the languages of those countries accordingly. As I stated before, the information document does not need to be approved by supervisory authority. It only has to be published on the website of the issuer. Such publication should take place before the offer begins. Information document is valid for 12 months. However, if there are changes to the information that is included in it, then updates must be made. Now I will go through the different categories that must be included in it. A summary, that's a 2-page summary of the information that's in other sections of the document. Then second is the information about the issuer that refers to the basic information about the issuer, the name, the code, place of registration, date of registration, and always the website on which the information document will be published, and any additional information such as, for example, financial accounts will be published. Then we find description of risks. These are grouped into 2 categories. These are risks related to the issuer, that is, risks related to the activity of the issuer, the markets in which it is active, products it provides, maybe any ongoing litigation. And another category are the risks related to the offered securities. So that can be, for example, interest rate risk, early redemption risk, the risk of absence of active secondary market. If bonds are secured, then might be certain risks related to collateral. In principle, it is required that only relevant risks are described, and there is no need to cover general descriptions of potential risks that are not really suited to the issuer. Then the reason for issue of securities must be specified. So the issuer must specify what securities are issued and the amount that it intends to collect from this issue. The purpose of the issue, for example, it can be to finance redemption of earlier issued bonds, or to finance repayment of a bank credit or a loan, as a working capital, or to finance a new or an ongoing project. Target investors, target country, that is a country where the bonds will be offered. The way the proceeds will be used, if there are several purposes for which the proceeds are to be used, and that should be shown per category. The amount should be distributed. Also, in case the bonds will finance only part of a bigger project, then the issuer should specify the total amount of the project, and also specify how it intends to cover the other amount, the remaining amount. Description of the securities, of the bonds, the class, the kind, the number, how many bonds are issued, their nominal value, their issue price, redemption price, the term for which they are issued, schedule of the offer. In case the bonds will be issued in several tranches, then that should be specified, and maybe if the dates are available, then those dates should be also shown. What the investor has to do to acquire the bonds, to pay for them, to receive them. The rules for distribution, that refers to situations, for example, if too many subscriptions are received, if there are more investors willing to buy than there are bonds, then the rules how the bonds will be distributed. Here, the most frequent rule is the first in time. And also, it must state what will be the situation if there is undersubscription, if the issuer receives only a smaller amount, whether it will proceed with the issue or whether the issue will be cancelled. Tax deductions, interest payable. What we see lately in the market, most often it is a fixed interest rate. However, lately we have also noticed interest specified as a margin plus Euribor for selected period. So this has to be stated, also the dates on when the interest will be paid. The option of early redemption, whether the issuer retains the right to redeem securities at any time. So that has to be specified, whether at any time or maybe within a certain period after the offering. Guarantees, if there are any, they have to be specified. Who is the guarantor? What is the amount of guarantee? Any conditions? Also, if there are no guarantees, it must be stated that there are no guarantees. And similarly for the security, if there is a collateral, what collateral and for what amount. Further activities of the issuer must be described. If the issuer makes part of the group, that has to be explained. Then the business model of the issuer, the main markets where it is active, the projects that it has done in the last 12 months, any significant investments done by the issuer, the total share capital, shareholders with more than 5%. This refers to both legal persons and natural persons. Where the shareholders are legal persons, then their UBOs, ultimate beneficial owners, must be disclosed. The issuer should state if it has issued any other securities, if there are any ongoing litigation, and specify the significant agreements that are concluded in the year of the issue and the year before. And this can be referred to, for example, patent agreements that are of significance for the issuer. Then financial information must be disclosed. Here, the issuer must specify what accounting standards it follows, that's local or international, and must include the annual financial info for at least last year. At least in Lithuania, this is a change from previous regulation when it was required that disclosure takes place of 2 years before the issue. Now it's only 1 year, and with this info cover, that's the annual financial accounts with comparable data of the year before, annual report of the management, and auditor's report. In case there is no auditor's report, for example, for the reason that audit is not obligatory, this has to be explained and has to be included as an additional risk factor for investor. If the issue of securities takes place more than 9 months after the end of last fiscal year, then intermediary financial accounts must be published. That's the half a year, 6 months. Now, it can be a situation where the company does not have so much history, is only currently established. That is fine. Then they have to publish the information that they have, but at the same time, it must be stressed in information document that the absence of history creates additional risk for the investors. Key indicators from financial accounts should be included into information document, and the company should also confirm that it has sufficient funds to conduct its activities at least for the next 12 months. And in case they do not have that, then they have to say how they will ensure that they will continue the activities for at least 12 months. And these are the couple of final categories. That is administrative management supervisory bodies of the issuer, the CEOs, the boards should specify names, last names, position, experience. Audit company must be specified, people who are responsible for drafting of information document, and conflicts of interest if there are any. And final category of additional information is where the corporate governance code is applicable to the issuer, and if the issuer complies with it, also any AML measures it applies, compliance with sanctions, and the procedure for amendment of information document. So this is, in short, the structure of information document. And just as to cap up, I would like again to stress what can you do once you have prepared the information document. So with information document, you can do a public offer in Lithuania of 1 to 8 million euros, a public offer in Latvia of 1 to 8 million, a public offer in Estonia of 1 to 5 million currently, but maybe hopefully subject to change in the future. And at the same time, the same document is sufficient for listing of the same bonds on First North Vilnius, on First North Riga, or on First North Tallinn. Thank you for your attention, and I pass the baton back to Inese.
Thank you, Lina, for your valuable presentation. Just a reminder to our dear listeners, if you have any questions regarding Lina's topic, I see that one is already here, or further topics by other presenters, please use Q&A tool that you see at the screen, and we will try to reply at the end of the presentation or publish our replies in Q&A section. The next speaker is Oliver, our capital market team colleague from Estonia. He will introduce us on the legal framework of the EU Sustainable Finance Initiative. We had heard a lot about sustainable finance and that this is a new normal in finance world, and especially in the capital markets. So please, Oliver, your turn.
So let's begin. The European Union has been at the forefront of promoting sustainable finance and recognizing the pivotal role of financial markets in achieving environmental and social objectives. There has been a noticeable increase in investor demand for sustainable investments. As awareness of climate change and social issues rises, more investors are seeking opportunities that align with their values and contribute to the sustainability goals. The market size of sustainable debt by the issuers domiciled in the European Economic Area has increased substantially over the past years, reaching to 1.7 trillion euros in the first half of 2023, which also means a growth of 130% in only 2 years. The regulatory landscape in the European Union has also seen a profound shift with a concerted effort to integrate sustainability into financial practices. And I will spend my 20 minutes today to explore the key regulatory developments and their implications on the financial sector. But without further introduction, let's dive into the significant regulatory developments. And at first, I thought of only using this slide in my presentation as it summarizes what I'm going to talk about and the framework of sustainable finance in the EU. However, I still decided to make a few extra slides to keep the picture moving. But this here basically summarizes the framework, which is called the EU Sustainable Finance Framework. At the top of it is the EU taxonomy regulation. Then we have a disclosure regime. We have different tools that help the market participants to achieve or follow the requirements that are applicable to them. And then we also have ESG ratings, which are also regulated in a near future. But let's start from the top, the EU taxonomy regulation. This is a legislative instrument that provides clarity what shall be considered environmentally sustainable activity and under which circumstances. It is a novel and complex instrument, and it is understandable that the undertakings have been facing some difficulties in understanding and applying the criteria in this early phase of implementation. But for example, from the perspective of capital markets transactions, it becomes relevant for the issuers when, for example, labeling the instruments. Sustainable bond labeling involves adhering to specific standards and frameworks. Until recently, the potential labels were provided in a form of guidelines by market participants. Out of these, the most popular guidelines are those prepared by International Capital Markets Association, and later on Silver Kalmus will talk about those standards as well. However, as a part of its sustainable finance framework, EU last year also introduced the first environmental and sustainable global bond standard. The standard obliges issuers to demonstrate that the funding of green projects aligned with the EU taxonomy. Therefore, the taxonomy would be unavoidable in the future for the issues and for the issuers in case they aim to issue bonds labeled as EU green bonds. My good colleague Agneta will introduce the green bond standard in more detail after my presentation. But now, as I said, also the EU taxonomy defines what is sustainable, or what kind of investment shall be considered as sustainable investment. Then we can see that the EU taxonomy regulation also provides some clarity what kind of investment shall be considered sustainable. It basically introduces three level definition. The sustainable investment is the one made in an economic activity that contributes to an environmental objective, and the environmental objectives that are used also come from the taxonomy regulation. So the taxonomy regulation foresees 6 different kinds of objectives right now that are seen as environmental objectives. Then the second layer is that the investment the funds are provided for the investments that do not significantly harm any of those objectives. So basically, it means that it contributes directly to one environmental objective, but at the same time, it shall not hurt or harm the other objectives as well. And the third layer is that the investee companies shall follow the good governance practices, and these are mostly related with the sound management structures, employee relations, remuneration of staff, and tax compliance. The taxonomy regulation is rather broad in its definition of sustainable investment, but this was done so by a deliberate choice, and it was decided to leave the activity or that the market participants themselves substantiate the definition and to avoid, so to say, over-regulating the definition itself. But the second pillar of the EU sustainable framework is disclosure regime. The disclosure regimes could be categorized as the other cornerstone of the sustainable finance framework. The disclosure rules integrate the taxonomy disclosures and adopt a double materiality approach. Double materiality means here that the involves the systematic integration of both the financial material sustainability risks and sustainability impacts in financial decision-making processes. Right now, we have two main disclosure regimes that have been introduced. The first one is called CSRD, or Corporate Sustainability Reporting Directive. And the second one is called SFDR, which is Sustainable Finance Disclosure Regulation. Those disclosure regimes are closely interrelated with each other and with the taxonomy regulation as well. And they work together to support directing investments towards taxonomy-aligned activities by enabling investors to identify these activities. The Sustainable Finance Disclosure Regulation is basically regulation that is designed to elevate transparency in the realm of sustainable investments. It mandates financial market participants and financial advisors to disclose certain information pertaining to environmental, social, and governance activities. These disclosures are required both at the entity level as well as the product level. And in the context of the SFDR, the financial advisor are organizations or entities that offer advice on investment or insurance-based investment products. And the financial market participants are organizations or entities that manufacture and sell financial products or offer asset management services. So this regulation is strictly applicable to financial market participants, and it is not applicable to any other sector enterprises. The Corporate Sustainability Reporting Directive, on the other hand, is the most recent legislative framework at the EU level, and this mandates to oversee sustainability reporting and officially supplanting its predecessor, the Non-Financial Reporting Directive. If we can move to the next slide, then we also see the implementation of the CSRD. And right now, 2024 and 2025, it is only applicable to large companies. But also from the perspective of capital market transactions, the year of 2026 is more relevant, because at that point it would also become applicable to SMEs that are listed on a regulated market in the European Union, provided that they also fulfill the other criteria as has been brought out in the slides. And now to the next slide, then, as I also said, the CSRD and the SFDR are two complementary regulations that aim to improve transparency and accountability in the ESG matters. The CSRD requires large companies to report on their sustainability performance against the EU taxonomy, while the SFDR requires financial market participants to disclose how their products align with the EU taxonomy. So therefore, the CSRD is relevant for the SFDR because it provides part of the information to be disclosed for the SFDR report. In particular, the CSRD requires companies to disclose their greenhouse gas emissions, water usage, and waste production, and this information then can be directly used by the financial market participants to assess the ESG risks and opportunities of a company's investment. Now, moving on, EU has also introduced other initiatives. The first ones are changes to MiFID II and IDD, both are directives. Actually, the new requirements came already into effect in 2022, and it brought along obligation for the advisors in financial instruments under MiFID regime and insurance products under the IDD that they now must ask their clients about their sustainability preferences as a part of the suitability assessment. The objective of the changes is to prevent mis-selling practices or misrepresentations. And regulating authorities have also provided guidance on various aspects in relation to that, such as how to help customers better understand the concept of sustainability preferences, how to collect such information from customers, and how to match customer preferences with the products. But as you can see, also the definition of sustainability is also directly linked to the taxonomy regulation, because the products that then are offered to the clients must also be aligned with the EU taxonomy regulation in case this is what the client wants. Now, one of the other important topics that is currently being regulated in the EU level is ESG ratings. Last year, in the summertime, the European Commission published its proposal for a regulation on the transparency and integrity of ESG rating activities. So therefore, it is currently work going on at the EU level for regulating it. Assuming that there are no speed bumps, the earliest that we could expect to see the agreement on a final regime would be mid-2024. However, it is, I would say, rather ambitious goal given the European Parliament elections this year and the current book of work that the European Parliament is facing. So therefore, it is rather at the end of 2024 or early 2025 when the ESG regulation might come into force. But the ESG ratings have become increasingly important in the proper functioning of financial markets, as they are a critical source of information for investors and financial institutions as well. However, at the same time, various stakeholders have expressed their concern with respect to the transparency of ESG rating activities and regarding the potential risks of greenwashing. And the same was also highlighted in a report published by the European Securities Market Authority, or ESMA, last year, springtime. And in the report, they identified ESG credentials, such as ESG labels, ratings, or certification as a high-risk areas for investment fund managers, because it is and because the ESG ratings and the rating providers do not currently need to follow any regulation, it was also ambiguous what the ratings or certifications contain. The regulation would be applicable to ESG ratings issued by ESG rating providers operating in the European Union that are disclosed publicly, or that are distributed to the regulated financial undertakings in the European Union. The regulation introduces various requirements for the rating providers, such as the authorization requirement. And according to the proposal, the service providers would in the future need to seek for authorization from the ESMA if they want to act as a ESG rating provider. It also foresees certain organizational and transparency guidelines. For example, that the analysts actually providing ESG opinions would be subject to independence requirements, including that those analysts would not be able to take up any key management positions at the entity for which they have provided an opinion within 6 months of that opinion. They also introduced disclosure and record-keeping requirements. For example, that the providers must publish on their website the methodologies, models, and key rating assumptions they use in their ESG rating activities, as well as the methodologies used must be rigorous, systematic, objective, and capable of validation. And also that such methodologies must be reviewed at least annually. And the last requirement that I have highlighted here is the operational limitations, which is meant to prevent any conflict of interest, because the proposal provides a separation of business and activities. And accordingly, the ESG rating providers would not be allowed to provide a list of activities, including consulting activities to investors or undertakings, the issuance and sale of credit ratings, the development of benchmarks, investment activities, etc., etc. So therefore, its aim is to increase the transparency of the ESG ratings and therefore also mitigate the greenwashing risk. And on the last slide that I have today, I have also highlighted here that there are also other kind of initiatives going on at the EU level. For example, recently, at the end of last year, the European Banking Authority introduced a voluntary EU green loan label to help spur the markets. So not only we see that there are different standards prepared for financial instruments such as bonds, but at the EU level, there's also work going on to expand even further the green labels on different financial products. But this is it from my side. Thank you, and I give the word back to you, Inese.
Thank you, Oliver. That was useful and worth to listen. Again, just a quick reminder about questions. Thank you already for those that have been already submitted. We see them and we are working on them. Now I'm giving the floor to my dear colleague Agneta from Sorainen Capital Markets team in Latvia. She will introduce listeners about new EU regulation about green bonds that is in force as of 20 December 2023, so end of previous year, and will be applicable from 21st of December this year. So new legislative regulation that will be applicable. This topic especially is valuable for potential green bond issuers. So please, Agneta.
Thank you, Inese. Well, I sincerely hope it's going to be useful for even those who do not feel like they are already prepared to issue green bonds specifically. But yes. So basically, as Oliver already mentioned, there are wider attempts by the European Union to stimulate investments into a more green economy. And in order to achieve the environmental goals that the European Union as a whole has agreed to, there is basically no other way how to achieve it. And definitely also private investment is going to be necessary. So what is this European Union Green Bond Standard all about? The regulation was quite some time in the making, and it was well anticipated by not just the private market, but basically by the wider economy. And the main aspect, what it does, it creates a regulatory standard for European green bonds. This doesn't mean that there were no green bonds so far. Of course, there have been, including also in the Baltic market. There have been a couple of green bond issuances, but those were based on the voluntary standards developed by the International Capital Markets Association, and my colleagues already mentioned that these standards exist. They will continue to exist in parallel to this EU green bond standard as well. But basically, any type of issuer that aims to issue specifically bonds that qualify under this European Union green bond label is gonna have to comply with the requirements of the regulation. It is important to note that green bond regulation, as you can deduct by its title, focuses specifically on the environmental or E aspect of the ESG. So it doesn't specifically address social or governance aspects of financing. Nevertheless, they are also a little bit slightly concerned, and that I will mention further on. The regulation is a bit broader than the European Green Bond. It also sets out voluntary standards for green use of proceeds bonds. So basically such types of green bonds that are not yet fully compliant with the EU Green Bond label, and also sustainability related sustainability linked bonds. As Ines already mentioned, the regulation is in force, but it only will be applicable as of the end of this year, so right in time for the Christmas period. As I mentioned, there's basically 3 types of bonds covered, and before we dive a bit deeper into the specific requirements for EU green bonds, I would like to draw your attention to the other 2 types of bonds that are covered by this regulation. So these are green use of proceed bonds and sustainability linked bonds who have environmentally sustainable objectives. So for the green use of proceed bonds, the main aspect is that funds are raised to achieve environmentally sustainable goals that are set by the issuer itself. Whereas the sustainability linked bonds, they are their financial indicators are affected by the achievement of these sustainable goals that are set by the issuer. The regulation only provides for voluntary disclosure pre-issuance. Initially, it was planned that, like for the EU Green Bond, also here, the rules would be sort of mandatory for those types of bonds that qualify. However, at the last minute, it was decided that voluntary regime will be better, taking into account where the market is actually at this stage. And it is actually, in my opinion, quite useful that there will be standard public templates that issuers of these types of bonds can use. They will be developed by the European Commission. So there's already some preparatory work that is done, that is going to be done for the issuers' use. Although these types of bonds, the green use of proceed bonds and sustainability linked bonds that have disclosures as per the regulation, although they of course are more flexible than the green bonds themselves, nevertheless, as and this partially also links to what Oliver mentioned, is that we can see that there are plans by the EU legislators to achieve a heightened standard for all types of ESG-related bonds, not just the EU green bonds. Maybe that's one of the topics that we might cover in another of our further webinars. And when we focus on the EU green bonds specifically, so there are certain criteria that have to be met, and probably the most substantial and most important criteria is that funds which are raised by these EU green bonds, they are only used for specific types of asset classes, and also they are used for achieving environmentally sustainable economic activities. And not just any types of activities, these must comply with the other regulation that is part of the broader EU framework relating to sustainability, the taxonomy regulation. Certain types of asset classes that these EU green bonds can be used for raising financing with are also set in the regulation. There's quite a few of them. I'm not going to go into that much detail because that's very specific. But generally, what is useful to know is that from these EU green bonds, directly, you could use the financing for achieving environmentally sustainable goals, or you can also finance other financial assets, and then in the future that financing can be used for economic activities that are in line with the taxonomy regulation. As of course it is going to be quite a challenge to ensure that funds raised with these EU green bonds are entirely in line with taxonomy regulation and entirely sustainable. There is what is called a 15% flexibility pocket. So basically 15% of proceeds raised by these green bonds can be used for activities that are not completely taxonomy aligned. Nevertheless, I would not go as far as say that this is really that flexible, because still, even this portion of funds, it can only be used to finance certain economic activities that are set in the regulation, and there still has to be some evidence that these activities will contribute to some extent to the environmental objectives of the issuer, or at least do no significant harm to these objectives. What is quite useful as well, a nice detail, that part of the issuance costs can also be deducted from the funds that are raised via these EU green bonds. Oliver already explained what are environmentally sustainable activities, so I will not go into too much detail about this. This slide is basically just a reminder of what actually constitutes environmentally sustainable objectives. And what I just would want to stress in addition is that although the main focus of green bonds is to finance transition to environmentally sustainable economy, we do not completely forget about the other aspects of ESG. So essentially this social and governance aspect, because as per taxonomy regulation, still there has to be compliance with at least minimum safeguards when it comes to social and governance criteria. And another aspect is, of course, which is probably gonna be one of the most, if not the most challenging aspects of these EU green bonds, and not just EU green bonds, but also for any type of sustainable activities, when it are those technical screening criteria that must be met, and these are established by the European Commission and are quite complex, and of course are probably likely to change as the time passes. Now, focusing on other types of requirements that apply to the EU green bonds, and I'm stressing once more, this specifically applies to the bonds under the EU green bond label. These do not apply to the other types of bonds that I mentioned before. The main aspects could be divided in three categories, as you see on the slide. One aspect is transparency. The second aspect is external review, and then the final aspect could be called supervision. Speaking of transparency, one quite significant change as of this regulation is that all bonds that are labeled as EU green bonds will need to be issued along with a prospectus that complies with the prospectus regulation. So unfortunately, the situations which my colleague Lina explained for the small issues where issuers can not use the prospectus, but instead go for a simpler document, the issuer is going to have to choose between those two types of scenarios. And if a green bond is the option that is decided to be the best, then there will need to be a prospectus. For us lawyers, of course, these are welcome news, because prospectuses are possibly, at least to me, one of the most interesting types of both legal as well as commercial documents to work with. But there's not only prospectus, there's other types of transparency documents foreseen. One is pre-issuance green bond fact sheet. So this is not that different from what the existing green bond and sustainable bond issuers already know. This is normally called the green bond framework, and the main idea is for this pre-issuance green bond fact sheet is going to be to explain how these bonds will contribute to the issuers' environmental strategy. And how, and also to explain quite in a detailed level how there will be a transition plan if the issuer is transitioning to a more sustainable type of business. That's not all. Also, after the issuance, there will need to be allocation reports published. So these allocation reports will describe how the funds that were raised via these green bonds, how they were actually used. Then there will also be a post-allocation impact report. So here, the issuer will need to describe how these financing raised via the green bonds has impacted its operations for in a way that it is now more environmentally sustainable. Again, what is, in my opinion, quite helpful, there are templates that are in the regulation that contain the main elements of all of these types of reports. So at least there is some guidance what is expected to be included in these reports. These all reports are going to have to be public. They will have to be published by the issuer on its website. Also, because there will be a prospectus, these types of reports will not need to be incorporated in the prospectus by reference, but they still will work together with the prospectus. Now, the second group of important changes due to the regulation is that there will have to be an external review of all the documents that I mentioned before. Well, not directly the prospectus, but the pre-issuance fact sheet and the post-issuance reports. And this independent external reviewer will not be able to be just any type of company. There will be a new special approval procedure and supervision procedure that will be carried out by the European Securities and Markets Authority. There is, of course, a transition regime, so the firms that are already providing some type of external review for the existing other types of sustainable bonds will be able to apply and start providing these new reports in line with the regulation after the transition period. And last but not least, when it comes to main requirements, of course, it all works only if there is some supervision. Also, not in respect only of these external reviewers, but also in respect to the issuer itself. So already now, if there are bond issuances and if there is a prospectus required, this prospectus is always reviewed by the financial supervisory authority of the relevant jurisdiction. Now, also these prospectuses, of course, will need to be reviewed, and also the other types of documents will need to be filed to the supervisory authority. So the new regulation poses some additional challenges and some additional work, not only for the prospective issuers, but also to the supervisory authorities. Now, to the maybe not so positive side of the regulation, Another part which is which in our area we deem necessary to ensure that these that the regime actually works in practice is that there will be quite significant sanctions in case there is some non-compliance with the rules of regulation. One group of these sanctions is that there is a suspension or prohibition or entire prohibition of the bond trading if the supervisory authorities discover that these issued green bonds do not really comply, or the issuer does not comply with the EU green bond regulation. There's also advertising suspensions on or bans and public notices about these violations. What is more severe, what is even more severe, if the issuer will make significant violations, then there may even be a prohibition for further EU green bond issuances up to 1 year. And of course, financial sanctions and financial fines as well. Now I'm at my last slide, and before I go into the topic, into details of this slide, I just wanted to note one important aspect that I probably should have mentioned before is that the EU Green Bond Framework is available, of course, to companies, to commercial entities, but also it is available to sovereign entities like governments or other types of sovereigns, and also for development banks. And now to this final slide. Of course, there's notable challenges that are associated with this new EU Green Bond Framework, but those challenges, I would say, are basically applicable to to a majority of companies already because of the sustainability framework. So one of the most complex task might be the data collection to actually prove that these funds raised via EU green bonds, that there is some changes in the environmental sustainability for the issuer, and for this it is both can be viewed as a challenge, and it can also be viewed as an opportunity at the same time, because working in the Latvian market, of course, we are aware that EU green bond may seem like quite a far and not relevant goal for smaller and medium type of entities, and even sometimes even for larger entities. And the requirements that I described before may seem quite complex. But at the same time, quite a few of these companies already now, and more companies in the future, will need to collect data relating to ESG, to sustainability, because of the corporate sustainability reporting directive Oliver already mentioned. So since the companies would be collecting this data, they might as well use this data also in bond issuance process. Then, of course, the other challenge is that this green bond framework does not completely replace the existing voluntary frameworks by International Capital Markets Association and others. So there will be parallel realities, so to say. But at the same time, I would want to remain optimistic about this, and there is actually a possibility for maybe to use a starting point for companies or other issuers, just to start by simple types of bonds. Then later you can proceed with these sustainability linked bonds or non-labeled green bonds that have these voluntary disclosures under the regulation. And then finally, when at a certain level of maturity, it is going to be possible to issue green bonds and raise financing for environmentally sustainable goals. Thank you very much. It was a pleasure, and I hope you found this presentation useful.
Many thanks, Agneta, for sharing this topic with us. So a lot of challenges and options new ahead of us. Now I'm introducing our guest speaker, Silver Kalmus, Debt Securities Area Manager and Sustainable Finance Advisory at LHV Estonia. Silver has participated in 8 sustainable bond projects, and he will provide valuable insights into sustainable bonds area. So Silver, the floor is yours, please.
Thank you, Inese. My name is Silver Kalmus, representing LHV Investment Banking Unit. So first, I would like to say thank you to all the listeners. If I had a hat on, I will take it off in front of the Sorainen team for organizing this webinar. I think it's really important to talk about the sustainable bond market these days because we are in the midst of emerging new sustainable bond market standards, such as EU Green Bond Standard. But one thing I can assure you that the current voluntary guidelines and templates that are out there and published by International Capital Markets Association will stay with us. And I will talk about the ICMA principles a bit later in my presentation. If I'm going to the next slide, then so firstly, I would want to define what is currently being considered a sustainable bond. So sustainable bond can be either green bond, social bond, sustainability bond, or sustainability linked bond. If we're talking about green bonds, then the proceeds raised from the issuance of green bond should serve EU environmental objectives. Social bonds are this type of bonds where the proceeds are used to finance some of the social projects such as education, social housing, or we saw during the COVID time, pandemic bonds that were also considered as social bonds. If you're talking about sustainability bonds, these are type of bonds that are combining both the environmental aspects and social aspects. And then lastly, the sustainability linked bonds are this type of bonds where the issuer is selecting one or multiple ESG KPIs, and the issuer is committing to enhance these KPIs over time. If you're looking at this slide, we can see that there are like several type of issuers that could issue sustainable bonds. We all know that Lithuania issued in 2018 the first Baltic sovereign domestic green bond. In 2021, Latvia issued the euro 600 million sustainability bond that was highly oversubscribed. The total demand in the books were more than 2.5 billion euros. Unfortunately, we don't have any municipalities that have issued from the Baltics that have issued sustainable bonds. However, I've heard some initiatives that might take place in the future, where we see some sustainable bond issuers from the municipalities as well. Probably all Latvians know Altum's success story in 2017 when they issued their inaugural green bond. From the banks, I think banks can clearly facilitate the transition towards a resilient, low carbon economy. Again, unfortunately, we don't have any local banks that have issued sustainable bonds, but I think by disclosing, the bank's green portfolio, it also showcases to the corporate banking clients, what type of investments are considered green from the bank's perspective. So I highly recommend also to draft sustainable finance framework for the banks. Regarding the SOEs, there was a 2022 report by OECD that said that SOEs are estimated to be responsible for over 1/5 in direct carbon dioxide emissions annually. There are really good success stories from the Baltics. Latvia and Estonia issued first Eastern Europe state-owned enterprise green bond in 2015, followed by Agneta's successful green bond issuance. EPSOG 2021, Augsburg Critical's green bond issue. From the corporate side, we from LHV see a quite increasing demand both from the retail investor base and also from the institutional investor base to subscribe to green bonds that are issued by the corporates. So in this slide, I will briefly touch upon what are some of the benefits of establishing sustainable finance framework, because sustainable finance framework in essence is the primary document that showcases to the investors what type of investments are considered green, social, or sustainability linked projects. And as mentioned by Agneta as well, that the current standards will stay with us as well. However, if the issuer would like to label their bonds as EU green bonds, then they have to take into consideration the EU taxonomy and the Annex 1 in EU green bond standard that is about the pre-issuance fact sheet. But yeah, the essence is that every issuer should establish a sustainable finance framework that normally starts from the overview of the company. Then the second paragraph is normally about the issuer's sustainability strategy. If the company doesn't have one, then they should disclose it in the framework. So in general, by establishing the framework, it will give some sort of a credibility and enhance reputation among the stakeholders and investors as well. And this is one of the first benefits of establishing the sustainable finance framework. So secondly, it will improve the ESG risk management because the EU green bond standards are quite strict. The international capital market standards as well as loan market association guidelines are quite strict, but they will, on the other hand, give some sort of a toolbox to the issuers how to think about the ESG governance structure and also ESG risk management policies. And thirdly, probably one of the most important benefits is that it will give more broader access to the capital. And we see that from LHV investor base that the investors are asking about investment opportunities in the sustainable bond market. And oftentimes, we can clearly see it from the green loans, but also from the bond side as well, that it could potentially offer tighter spreads for the issuers. So if we are looking at the overall global sustainable bond market, then we can see on the upper left-hand side chart that in 2021, we saw a peak in sustainable bond issuances. If we are looking at the right-hand side, right-hand side chart, then we can see that more than half of sustainable bond issuances are coming from Europe, and more than half are green bonds. We also see in 2021 a pickup in social bonds, clearly due to the fact that we were in a pandemic. If we're looking at the lower left-hand side chart, then we can see the Baltic sustainable bond issuance per year. As mentioned, in 2015, we saw Latvia and Estonia 75 million green bond. Then also the first corporate issuer from Central Eastern Europe was Nelja Energia. They issued 50 million euro green bond. In 2016, we saw Latvia Energo subsequent 25 million green bond. In 2017, we saw Ignitis entering the market by issuing euro 300 million euro bonds, and also Altum issued their 20 million green bond. In 2018, we saw a subsequent issue by Ignitis. 2019, we saw the first Lithuanian corporate issuing euro 20 million green bonds. Those bonds are actually maturing, if I'm not mistaken, this year. They were issued by Auga. In 2021, we saw quite many sustainable bond issues. Firstly, the biggest sustainable bond issue from the Baltics, Counsel Invest. The issuer there was Lina, but eventually it's Counsel Invest sustainability linked bond issue. Also, we saw a couple of green bond issues like AEI, like a fund managed by Lords LB, established their euro 100 million green bond program, and they successfully entered the market in 2021 by issuing 25 million green bonds. Also, Latvia Energo again issued 50 million euro bonds. In 2022, we saw again AEI tapping the market. Then we saw Eleon issuing green bonds, and again Latvia Energo issuing green bonds. From the sustainability linked bond sector, we saw EPSA-G inaugural sustainability-linked bond, and also Greenbit issuing 35 million sustainability-linked bond. And last year we saw Latvia and Estonia again tapping the market, and also we saw AEI green bond issue. Now moving to the process, how it looks when we're talking about establishing a sustainable finance framework, and also as mentioned by Sorainen and colleagues that there should be a pre-issuance review already. Actually, if the company would like to issue green bonds today, even if we're not talking about the EU green bond standard, then firstly it starts by just establishing a sustainability strategy, because that's the first paragraph as mentioned. And secondly, normally in the first 2 weeks, the advisors together with the issuers are thinking about the eligibility criteria of the green projects. And then normally the first 4 weeks is the preparation phase, and this is like the amount of time you need to prepare the framework. After that, the draft framework will be circulated over to the SBO provider. Maybe later in the presentation I can talk more about who are some of the SBO providers out there, and who are maybe some of the most experienced with Baltic issuers as well. So this process is like additional 4 to 5 weeks, depending on the complexity of the framework. But basically, it's an iterative process between the SBO provider, the advisor who is assisting to draft the sustainable finance framework, and also the issuer. So normally, in the preparation phase, more involvement is needed by the issuer, by the company, and then later on, the SBO analytical team is taking over, and eventually publishing the SBO on both SBO's website as well as on issuer's website, because the report should be available to investors. Now diving maybe more deeper into the existing standards or voluntary standards by International Capital Market Association. As you can see, there are like quite many similarities between what is required by the new EU green bond standard and what's required by the ICMA green bond principles. So firstly, the first pillar is use of proceeds. The issuer should select green bond principles, green project categories that are contributing to environmental objectives. Those are like renewable energy, energy efficiency, clean transportation, etc. Secondly, the issuer should define what are the green projects that are falling into these green project categories. So now under renewable energy, those can be solar PV projects, wind parks. Under clean transportation, for instance, it could be, net zero emitting vehicles, infrastructure that is enabling those vehicles to drive on the street, also charging stations, etc. Thirdly, what is actually the most important, and from the SBO side, what I've seen is the most severe criteria that they're analyzing is the eligibility criteria itself. I think the EU taxonomy is really cool, a really good tool for issuers to help to draft this criteria. I see lots of inaugural issuers or issuers who are updating their sustainable finance framework are already using the EU taxonomy as the eligibility criteria. So those criteria should be created for each of the green project categories, and also each of the project within this category should fulfill all the conditions under the criteria. And then, as mentioned, official and market-based taxonomy should be also used as classification systems such as EU taxonomy and other market-specific taxonomies. And then some of the eligible expenditure may include refinancing projects, capital expenditures, OPEX, some of the financial assets, and research and development projects. Now the second pillar is the process, how the issuer is evaluating and selecting those green projects. So firstly, every issuer should have a clear process in place, how they're screening and identifying potential green projects that correspond to issuers' overarching sustainability strategy. Secondly, there should be a dedicated team in place. Normally, it's a treasury department who is responsible that identified projects are in compliance with the eligibility criteria of the framework and applicable laws and regulations. And thirdly, the party should approve the evaluated and selected projects and then mark them as a green project in a dedicated green register. So they should ultimately separate the green assets from other assets, because that will be the basis for the impact reporting later on. So the third pillar of the ICMA green bond principles is the management of proceeds, because the issuer should use, as mentioned, a dedicated earmarked account to track the allocation of net proceeds, and they should only be directed towards green projects. There should also be a dedicated department that is responsible that those proceeds raised from the issuance of green bonds will only go towards green bonds that meet the criteria in previous paragraphs. Then the allocation, the look forward period should be defined. The market practice currently it's about 3 years, but one thing that is really strict that the SPOs are already looking at is the look back period. If I'm not mistaken, then even in the EU Green Bond Standard, it said that the maximum of the look back period should be 3 years. This is the current market practice as well. But then temporary holdings, there should be also a process in place to track the unallocated green bond net proceeds, and any unallocated proceeds should or can be placed in liquidity reserves, invested in money market deposits, or invested in predefined green indices, or for instance green bonds, but they should be really liquid. And then, as in most of the investors or institutional investors, at least also the issuers should have an exclusion criteria in place where they are definitely not going to invest. And maybe the fourth pillar that was also touched upon under the EU Green Bond Standard topic is also the reporting. So all the issuers that want to issue sustainable bonds today have to also do the annual allocation reporting as well as impact reporting. The first report should be available no later than 1 year after the issuance of sustainable bonds, and they should continue reporting until the full allocation. And as mentioned earlier, all the reports should be available for the investors. Either they will be sent via emails, or normally the market practice is that the reports are available on issuer's website. Regarding the allocation reporting, some of the information that is needed for the allocation reporting is the total amount of green bonds issued. That's quite straightforward. Then also breakdown of amounts allocated to each of the green project category, then share of proceeds used for financing versus refinancing, then illustrative pictures, descriptions about the green projects that the issuer has already financed, and then the share of the unallocated proceeds at the end of the reporting period. On the impact reporting, some of the metrics that issuers are using, most widely used, is the annual greenhouse gases emission reduced or avoided. Its measure is in tons of CO2 equivalent. Then also estimated reduction in car use, for instance, that the project will replace. This is really common metric that the issuers that are investing in clean transportation are using. Number of kilometers of new walking, bicycle lanes, etc. Then annual gross amount of waste that is separated and or collected and treated. Then installed renewable energy capacity or annual renewable energy generation under renewable energy, or green buildings, for example. So now, who are some of the SPO providers that are currently out there? And I know that most of them are working on to get the ESMA approval to also be the pre-issuance verification provider under the EU Green Bond Standard. So maybe one of the most commonly used SPO provider has been historically Cicera, that is now S&P Global, because they merged with S&P Global. really good experts from Norway, really good, strong analytical team. They have a quite widely, market knows their principles quite well. It's called shades of green methodology that they're using. Then Moody's ESG Solutions is quite active in the Baltic market, always doing roadshows and introducing their methodology. One of the SPO provider that I've been using the most is Sustainalytics. Also really good, strong teams all across the Europe. Sustainable Fitch is also widely used, but I haven't seen that they have provided SPOs to any Baltic issuers. DNV that was used by Nelia Energia back in 2015. And then post-issuance review, as mentioned, it could be like limited assurance report on the allocation or impact reporting. So these are some of the big audit firms and then some of the ESG service providers that could provide this type of service. That's it from my side. Thank you so much.
Thank you, Sur. That was really valuable presentation. So everybody now will look into the sustainable bonds. Thank you to all presenters. Now we have reached the Q&A session. Thank you for your questions, a lot of them. We will try to reply to them during the remaining time. And I will start by one. And first three questions, Lina, will go to you. I will start with the first one and then I will proceed. So the first question is, we plan to issue our bonds and to have them offered publicly. What will be the added value of listing them on Nasdaq First North?
Thank you, Inese. That's really valid question, and we here our clients have been asking this question more often. And well, the point is that if you are doing a public offer, you will anyway, well, talking about the small issues between 1 and 8 or 5 in Estonia, you will anyway have to prepare information document. You will have to have your financial accounts ready. You will have to publish them. So you will have done already much of the work. And then, then the question, should we still list on Nasdaq First North? Well, I would say that listing on First North has several advantages. First of all, it provides a secondary market for investors. So investor might be more likely to buy the bonds because he knows that in case he needs to sell them at any time, they can do it on Nasdaq. Investor also has better access to information because not only the issuer will be publicizing information, also Nasdaq will make sure that the issuer does publish information and the Nasdaq platform will be sharing that information. It can also be seen as a sort of publicity for the issuer who considers issuing bonds later again, because it gives them certain track record that they are on the exchange for a while. They were disclosing their information. So that's sort of a good history to have in case you want later to go for a bigger issue of bonds or issue of shares or whichever. So I would say those are the main advantages. And also, at least in Lithuania currently, the state agency in Vega has approved a measure where they are covering expenses related to the issue of bonds in case the bonds are listed either on a regulated market or on Nasdaq First North. They're covering up to 50% of the costs and up to the amount of 50,000 euro for bonds. The costs that can be covered are related with preparation of information document or prospectus, the cost of advisors, legal, financial, tax advisors. Certified advisor services can also be covered by those monies. So I would say those would be the main reasons to consider on whether to list the bonds on Nasdaq First North.
So thank you, Lina. I will then ask the second question. On the slide, there were shown different requirements for info prepared about the issue. There were mentioned different options, how planned issue is organized, public offer, regulated market, etc. Do I understand correctly that the only difference between the public offer and regulated market is where the bonds will be traded on the stock exchange or not?
Yes, public offer is a more generic category, which means that the securities or the bonds are offered to the public, basically, to undefined investors. The public offer can be done in a variety of ways. Can be the issuer can, for example, post advertisements on his own website that I am selling bonds, please buy. He can engage investment firms, engage banks to distribute the bonds, like the banks in their offices, in their affiliates, they can be selling and offering. That's also a public offer. And one way of doing a public offer is also doing it through regulated market. That's what is called IPO. And the regulated market is a legal concept, but indeed it means the stock exchange. So as I said, on what can happen on stock exchange, you can have the IPO, or after you have publicly offered the securities, you can list them for trading, so that those investors that have already purchased the bonds, that they would be able to sell to others who are willing to buy from them. Then the purchase is from the other investor, not from the issue. I would say those are the distinction.
Thank you. And the last question is, how do I understand correctly that regulations for bond issue refer to one issue, one ISIN code only? In case the company issues several bonds, no tranches, several ISIN codes, the issued amounts don't add up, and the documentation and offering rules apply to each issue separately. For example, if the company makes two issues, 4.5 million plus 4.1 million separately, it does not need a prospectus. Can offer both bonds up to 150 investors per country, etc. Thank you very much.
Yeah, I think there's a bit of a confusion in the question, but I'll try to separate it. So the thresholds that I have discussed, the 1 till 8 million or 5 for Estonia, these apply for each issue, each separate offer. So if you have distributed bonds for 7 million, let's say, and later in the same year you decide to offer again, the same threshold again applies, again up to 8 million, you can distribute with information document. The issue that you have to consider is that when you will be making the second offer, in your information document, you will have to disclose the fact that you have already outstanding bonds. You may have to disclose what will be the ranking of investors, whether all claims will rank equally. If the first issue of bonds, for example, were secured by certain collateral, then the question is for the second issue, whether that will be a secured issue, and if it will be secured by the same collateral, then you will naturally have to say that it's second ranking claims. So I would say those will be the differences. And then I see that the exception of 115 investors got caught up there. So I will just would like to repeat that the exception of if you are offering only up to 150 investors, the issue can be bigger. You can offer 20 million and don't draft a prospectus, because that's the exemption from the prospectus regulation. I hope that answers the question.
Okay, thank you, Lina. Now I will ask several questions to Silver. So Silver, the first question is, what would be the indicative yield spread between green bonds and with all minimum needed frameworks and regular bonds in the current market situation in Baltic market, if we look at small and medium companies in Baltics?
Yeah, Thanks for the question. I think this is one of the most frequent questions that I'm getting. I think to answer that, we actually need, two bonds that have the same maturity and issued at the same time. One is conventional bond, another is green bond. Then we can, see, what is the spread between those two bonds. In Baltics, unfortunately, we don't have those precedents in the corporate sector. However, if we're looking at the broader European market and looking at the European green bond market, then there are some precedents. Of course, depending on the maturity, the issuer, like the average spread could be in a context of 10 basis points to 40 basis points. But of course, we cannot say that to corporate bonds issued by Baltic corporates, because they just don't have such precedents. But maybe another thing worth to mention is that for some issuers, it's actually even not possible to issue bonds without having any green labels to it, because there is not just market demand for those bonds. So, but yeah. To answer the question, it's really difficult to say, what's the spread between the green bond and conventional one.
Thank you, Silver. So the next question is, does Baltic markets have success stories in green bond field for SMEs? It is clear that all the big companies such as Altum, Latvia and Ergo gain back costs on attractive volume and end yield spread. But does markets in Baltics currently provide direct financial benefit, not including all the side benefits of the green bonds for SMEs? Let's say that the company wants to issue euro 15 and 20 million euro bonds.
Yeah, I think it's kind of related question. So firstly, of course, there's definitely a market for green bonds that are issued in a size of 10 to 15 million euros. To answer what are the financial benefits, it's again really hard to comment. I'm sure that at least what we see from LHV, what we see from the private banking clients, as well from the retail clients, as well as from institutional investor side. I'm myself actually doing roadshow in Vilnius. Yesterday I was in Riga. I also touched upon the topic, and some investors are saying that they barely look at the financials. There's no green credential needed for them, but the majority is saying that they are looking into the green bond market. Yeah, I think that was all I wanted to say. In terms of do we have success stories from the Baltics? I think I had a slide in my presentation as well. At least to my knowledge, in total there are 13 sustainable bond issuers, including government of Lithuania, Latvia. There are 3 corporate issuers, Auga, AI, Nelja Energia, and I'm sure there will be more coming to the market this year. We are already working on a couple of green bond projects, because we simply see that there is a demand from the investors to invest into those bonds, but really hard to define what are the financial benefits. If we are as indicated in the question as well, regarding the high grade issuers, it's easier to draw a difference, what the financial benefit that they can get out of it. But of course, it's a issuer specific question, so we should take a look at the issuer's financials, look at the potential investor base, and then answer to that question.
Thank you, Silver. Now we have a couple of questions addressed also to you during the webinar, and let's say I will ask them these to you as well. So the first one is total sustainable bond issuance in Europe has been decreasing over 2021-2023. What are the main reasons for such development, as one would expect that these issuance have to increase from year to year? What trend do you expect for this year, 2024?
Yeah, thank you. It's a good question. We also saw a silence from the Baltic market, only 2 green bond issues. As mentioned, the 2021 was a peak. Last year was just the interest rate environment was totally different. But this year, what we see, and also like regarding the Euro green bond and in general the debt capital markets, it was more silent. Lots of issues were postponed. We know like some of the Baltic names that had to refinance some of their bonds. They had some of the call dates coming last year, but they have postponed it because the market environment wasn't that favorable. This has changed this year. We saw this year government of Estonia issuing 1 billion euro bonds. It was highly oversubscribed, really successful trade. And we see the same trend continuing in corporate space, in SOEs, and yeah, hopefully we see, at least this is what my personal opinion is, that this year we should see a peak in sustainable bond issuances as well in Europe.
Thank you, Silver. And there was especially one addressed to you, mentioning you. Let me check where it is. We have a lot of questions. Thank you very much to listeners. Question to Silver. If an advisor, e.g. Big Four firm, does the review within the green bond framework, can it later do the limited assurance of sustainability disclosures under CSRD?
Yeah, I can partially comment, and then maybe somebody from Sorainen can take over. Yeah, so firstly, I didn't understand whether they were talking about the pre-issuance review or post-issuance review, but I think it's really important to pick some of the most experienced either SPO providers or external verifiers that are evaluating the reporting. We should also select those verifiers that have experience in the local market, because the Baltic market, this is smaller, so they should also understand what are the biggest concerns here. And yeah, maybe somebody from Sorainen would like to comment on the CSRD.
Oh yes, perhaps I don't know, Oliver. Perhaps you can make some comments or.
Sure. I would say that, under CSRD, I understood the question is rather directed or related to the, let's say, bond issuance and the evaluations provided in relation to that. So CSRD maybe is not a regulation that foresees any requirements for that purposes, but it might be relevant also from the perspective of the ESG rating providers, as I also mentioned during my presentation, that the new regulation that is currently under development is also foresees certain restrictions, what not the ESG rating providers can do in the future. So yeah, it is more a question of that. So I would say that the ESG rating providers would not be allowed, or they would have a conflict in some situations when doing their activities.
Thank you, Oliver. And please stay, because I have a lot of questions also to you. The first one is, are there any uniform or comparable measuring criteria that show if the company does well or not so well regarding ESG related topics? Or is measuring metrics set up everyone's personal responsibility?
Thank you for the question. I would say that we don't have like a single criteria or database or something like that at the moment. It is more dependent on, as I said, also we have dual disclosure regimes, SFTR and CSRD right at the moment, because, for example, small companies and also SMEs at the moment would not fall in under any disclosure regime. Basically, if they want on a voluntary basis to report their activities in relation to ESG matters, they can do it. They can do it on a voluntary basis. They can take some kind of like voluntary guideline to report, but they don't have to. So in that sense, basically, the small companies can report how they want, but the big companies that fall under CSRD or also SFDR, they have a criteria deriving directly from the law, what and how they should disclose, and in that sense, it is more comparable than for the small companies.
So the next question is also to you, Oliver. Does ESG rating regulation also provide for the harmonization?
If I understand correctly, the question, it is directed to whether the methodologies used by the rating providers will be harmonized. And if this is the question, then the answer is no. The methodologies will not be harmonized, at least with the current proposal that has been circulated. But the regulation is rather directed to for the service providers to provide more information, to be more transparent and disclose more on their methodologies, so they can pick whatever methodology they want. However, they would need to disclose public information to describe the methodology. For example, whether and how the methodologies are based on scientific evidence, or if the ratings clearly mention whether they assess risks, impacts, or some other dimensions of the ESG related aspects. So it is more, I would say, a transparency regulation, and it would not regulate the actual methodologies of the service providers.
Thank you. So the question also is to you, Oliver. The one that was asked before that question: if the issuer has issued simple normal bonds, so not green bonds, then CSRD reporting standard is also applicable.
Yes, this is correct. The CSRD would not be applicable solely to the issuers of sustainable instruments, but it is more general and would also be applicable to SMEs in case the SME is listed on the regulated market. So whichever product they have brought to the regulated market.
Thank you, Oliver. So the next question is in respect to Latvia, and I and Agneta will take over. I will first comment, and then Agneta, if she would like to add something. This was actually a very good question. The question is what Latvian entities or the legislator should do to catch Estonian and Lithuanian rivals that are currently most successful in the bond market. That's a good question. And actually, I would say that in the bonds, we have seen several small issues in the last year that also were listed on the first note. I would say that the main issue is about the IPOs, about share listing. And here I would say that yes, Lithuania and Estonia are more ahead of us. And this is, in my opinion, it's mainly due to that there are large companies listed like Ignitis, like Enefit. And in my opinion, listing of such similar size state Latvian company would also facilitate the Latvian capital market. Agneta, perhaps you also would like to add something.
Sure. Sure, Inese. Thank you. Indeed, that is a great question. And I would say that there already have been improvements. And what Lina just today explained in her presentation about these uniform requirements for smaller issues, I would say that it is quite an important step towards advantages also for Latvia, because so far when we were working on projects with smaller issues, it was actually an obstacle that the standards differed among Baltic states. So it was simply not efficient to, let's say, issue bonds and offer them simultaneously in all the three countries, because each had a separate set of rules. So I would say that this new amendment actually would help quite a bit. And then I'm also keen to see what other ideas are going to be discussed in the next week's Capital Markets Forum organized by the Bank of Latvia. So
thank you, Agneta. Indeed, we are much looking forward to this next week Capital Markets Conference Forum organized by the Latvian supervisor of the Bank of Latvia. The next question, I will answer it by myself. This is there any information overview available about what are the volumes of the bond markets in 3 Baltic countries, e.g. the number of companies issuing the bonds, value of issued bonds, etc. Thank you. Actually, there is a very good site by NASDAQ covering all 3 Baltic states. There is numbers, there are companies that are issuing the bonds and that are issuing the shares that are listed in the Baltic bond markets that are issued in the First North. For each company, there is a separate chapter section. There is also information about the documents published, prospectus or offering document, also announcements that have been made. Really friendly, useful, recommend that. And also additional information can be also seen at the NASDAQ depository at the statistics section. And this is also divided. You can make a search, you can search for each company. The next question, I would ask it to Agneta and Silver. Perhaps one could comment from the business perspective and another one could comment it from the legal perspective. As it was mentioned, there are now parallel green bond standards, ICMA, EU. Is there any major pros and cons to use one or another? If I'm EU issuer, which standard I should choose? Perhaps Silver, you can comment from the business perspective, and then Agneta could comment from the legal.
Yeah, thank you. I think, again, it's a good question. It, of course, depends on the issuer again, and, you know, what are the investments or refinancing plans, or I mean the capex plan in general. So I mean, if the company could share with Agneta and me the capex plan, then we could together evaluate the capex plan and then recommend whether to do a EU green bond or green bond based on the current market practices and then the ICMA templates. But yeah, it's really tough question, and I know that lots of issuers are thinking about the topic as well. To my knowledge, there are no EU green bonds outstanding. Lots of issuers are updating their frameworks. They are trying to apply the EU taxonomy regulation in it. But yeah, if possible, then of course. Probably we would be the first EU green bond issuer in the Europe. So if possible, let's issue EU green bonds together.
Yes, to add on that, of course, the formal EU green bond label bond is going to be much more legally complex just because there's more stringent requirements, more extensive requirements, etc. And so these voluntarily applied and non-regulated labels are going to be less challenging in that sense. However, I am getting the sense that as the time passes, this question is going to resolve itself, because likely, as actually Silver mentioned during his presentation, even those voluntary standards are also encouraging like more stringent approaches or following the taxonomy regulation. And then also, as I raised in my presentation just briefly, there is legislation in the works to ensure that also other types of bonds that are not EU green bonds, but other types of sustainable bonds, that there is no greenwashing when it comes to these types of instruments. So that means that they will gonna become more and more complex. So I definitely agree to what Silver said, that if possible, probably green bond might be a better option, simply because it's as the time goes by, it probably will become the only or the better standard.
Thank you, Agneta. Please stay. I will have a couple of questions to you as well about the green bond regulation. Can a bond get a green or any other environmental friendly label sometime after the issue? Quite an interesting question, I would say.
Yes, indeed. Well, not EU green bond, because to issue, you would have to actually comply with the regulation before the issuance itself. However, of course, from economic sense, in a way, it is possible if you, let's say, if you issue one type of bonds first, and then at some time as the company matures and is ready to issue green bonds, then you can probably refinance your existing not so green bonds.
Thank you, Agneta. And there is also another question to you. If EU green bonds proceed should be taxonomy aligned with 15% pocket, then what green framework would require environmental sustainable bonds?
This again sort of relates to what I mentioned before, and it stresses the importance of actually this EU green bond regulation, because it's the first regulatory standard for sustainable bonds. So there is no other regulatory standard for other types of bonds yet. There are these voluntary standards. So again, issuers looking at those might look at some industry developed guidelines, let's say International Capital Markets Association's principles. But again, we go back to the issue that even those standards are becoming more and more aligned with the taxonomy regulation. So at the end of the day, it might just become one and the same.
We have reached the end of webinar. Perhaps also one very quickly, and just Oliver to comment from CSDR perspective. There was one, if dedicated department and other organizational requirements are in place, how could smaller companies comply with them? It would be quite costly to hire additional CFO for this dedicated cash flow.
Yes, maybe just to address it from the perspective of CSRD, then the CSRD also, together with CSRD, at European level, they also introduced standards for reporting, which are called European sustainability reporting standards. And these are different for large companies and, for example, SMEs. So, for example, the CSRD requires that sustainability reporting standards for listed SMEs should be proportionate and relevant to the capacities and characteristics of the SMEs and to the scale and to the complexity of their activities. So in that sense, it is not, let's say, single regime for all the companies, but actually the standards that are used for reporting are also or would also vary depending on the characteristics of the companies.
Thank you, Oliver, and thank you all to our speakers. And thank you also for participants for submitting such interesting questions. That was actually quite interesting Q&A session, I would say. And still, if you have any additional questions that you would like to ask to us, there is also our email addresses, and please do not hesitate to contact any of us. We are all experts in our capital markets and as well in the financing. We have also in this slide have put a couple of items where we can help you with, and I will just list some of them. So we would be able also to assist you with initial public offerings and also following public offerings of the shares. We also can help you with the issues of secured and unsecured bonds, the ones that we have discussed also in this webinar. We also can provide legal assistance in entering the regulated markets that Lina has talked about. All 3 Baltic offices provide certified advisor services for admission to Nasdaq First North. We also know a lot about energy financing projects and also acting on the behalf of either the borrower or either the lender. We know a lot about the structuring of investment funds and investments in funds. As you know, we are ESG experts. We know a lot about them, and also indeed our tax colleagues know a lot about tax structuring. But these are not the all areas that we know, and we can help you. This list is not complete. So if you have any questions, just please do not hesitate to contact us or any colleague from the Sorainen in any Baltic countries. Thank you for listening very much. We hope to see you in the next webinar. Thank you.